Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar still remains to a bullish bias and therefore I do anticipate the upside contest of 74.45.60 very soon. The reason behind this is the RSI, since breaking through the midway point, is married up to the MACD and supporting this climb. Now, to some surprise, the market was taken back a little after the RBA's rate decision announcement and statement. More to the fact, the statement was the surprise that the RBA said it would continue to taper its bond buying program from September, going against market expectations as lockdown depressed economic activity. Now, from the hawkish statement, the market has found a little bit more momentum from there. Now, all eyes turn to this Thursday at 7 p.m. when the governor from the RBA will testify before the House of Representatives Standing Committee on Economics in Canberra. Any pullback likely to be shallow, and I do anticipate the support holding from an intraday view at 73.80. Well, as we get closer to the main event for this week, which is the non-farm payrolls, the market looks tonight to the release to the ADP non-farm employment change. Now, from the non-farm payroll number, the forecast expects the economy to add 895 jobs in July after a forecast beating of 850,000 in June, while the unemployment rate forecast is seen at 5.7% with the previous release at 5.9%. From the technical aspect, we're still holding to a somewhat bullish case for the euro and therefore looking towards that target of 119.1015, which could trigger a bull trap. Now, the measured move from this falling wedge gives me a projection or a trajectory to that level around 119.1015, and that's where I feel the market may fail and turn around and see the dollar index, which measures the greenback strength against a basket of 6 major currencies, rise from its current level of 92 figure and up to around 92.60.80, and maybe with a broader picture to about 93 figure to 93.60. That in terms will see the euro fall away from this top side as it is weighted to the US dollar at 57.6 and therefore look back towards the bottom side of the range around 118 and eventually lower. But let's see how the market plays first into this week's figures. Dollar yen reaches its downside target, and that is of 109.15, with the market still showing an ADX to a bear trend, that is, and with the RSI still slipping along with the MACD, could see a little bit more pressure to the downside. But I do anticipate that there might be some stops lingering a little bit lower, but the bull camp is likely to be holding around that 108.45. The sterling outlook has still picked up a bit of pace, and into Super Thursday, all eyes will turn to the Bank of England rate decision, and widely expected no change, but it's more about what the statement and see how the market participates in viewing whether it's more dovish or hawkish. And I feel the market might see it a little bit more to the hawkish side, but let's see. Technically speaking, we could see the market rise up towards 139.75, where it previously did reject, and reassess from there. Sterling yen a little bit apprehensive as we got a bit of a spinning bottom here. The market was looking towards that bottom side of 151, where the support is situated around 150.70.95. At present, we're seeing a slight recovery here from the rebound. Keep an eye on this market. If the pound does stretch up a little bit further, then we will see this cross climb a little bit higher beyond 152.10 and to 152.80, and most probably find a cap as it gets more congested towards 153.50. Wrapping up with gold, well, the market is coasting to a sideways pattern, and no doubt a lot of the investors or market participants are sitting on the sidelines and waiting for the figures to come out on Friday. Nevertheless, from a technical point, it is a little bit mixed. I feel that the market, after the 4 challenges towards that top side of 1,833 to 35, it's getting a little bit tight, so we could see eventually a test down if the dollar index does strengthen. And looking at oil, well, the market still looks relatively heavy after seeing another down day overnight and hitting briefly a low around 68.90. From a technical point, the call is still towards 68 figure 40 and reassess from there because beneath sees little support until 66.60 to 66.90. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report and I hope you enjoy the rest of the day.